Where do they trade?
US, I'm pretty sure. Let me double check.
I don't know, dude. I used to trade commodities, and I never traded butter.
Cash settled butter futures, CME.
Wow.
I mean, I'm talking thin. I'm talking super thin.
Hey everybody, it's your boy Chicago Sean McLaughlin. I'm the Chief Options Strategist at All Star Charts. I'm joined with the main man, Steve Strazza. Strazza, what's happening?
Not much, man. How you doing?
Wow, 2 days in a row you and I get to do a live stream. Man, things are moving around here.
JC should go away more often.
I know. Normally JC joins me on this call, but he's traveling. In fact, he's here in my town, here in Boulder. I'm going to take him to the airport as soon as I'm done with this call, actually. So yep, we're filling in for JC now while he's, I don't know, what's he doing? Playing hooky? Sounds like he's playing hooky. I don't even know what he's doing.
He must be skiing out there.
Yeah, I think that's what he's really been doing because I haven't seen him much while he's been here. Anyway, all right, so let's talk about today's trade, the options trade that we did today. You and I were talking this morning, and we were kind of, starting to poke our head around the leading sectors, looking for strength like we always do. That's part of our process. And one of the challenges that you and I were having when we were looking through all of our favorite names, these names were either pretty extended already, and we felt like we'd be chasing them, or they had earnings coming up this week or early next week, which always makes things a little bit dicey as far as timing a position entry, or the options market themselves were pretty thin, right? They didn't have a whole lot of open interest, or the bid-ask spreads on the options were pretty wide. So we were struggling for a little bit, but then all of a sudden, you turned my head onto this Corteva stock I had never heard of. In full disclosure, I had never heard of it until today. Tell us what this company Corteva does, this ticker CTVA.
So this is one of the biggest companies in like the agricultural space. Really, fertilizer stocks is what we're talking about. It was actually a spinoff of Dow DuPont. So this was Dow DuPont's agricultural division. It was spun off in 2018. Really nice chart, as you could see. Pull that up right here. Super nice chart. They pay a 1% yield. They've been raising it every year consistently. So for three years now. And really what we're seeing, like you said, it's things like energy are a little bit stretched to the upside right now, but we're seeing that commodity trade kind of broaden out into other areas. So agricultural stocks are really hot right now. You can look at the ETF MOO, M-O-O. It's an agricultural ETF. It's making new highs today. This is just a derivative of that trade. We're seeing cotton, soybeans, coffee, all breaking out, in the futures market. Corteva is going to benefit, from the same type of commodity cyclical theme.
Right. So what we liked about this chart, we're looking at a monthly candle chart here. It also looks pretty good on the weekly candle chart. But when you zoom out here, you can see the entirety of the trading action since it became public in 2019. And what we liked is that when it first went public, it basically just went sideways and formed a base for the better part of a year. And then in early 2020, it finally had its real first breakout and had a nice little run. It went from around $32 a share up to $52 a share. Really good first run. And then it just kind of stopped, paused, formed a new base, which is very healthy action for the long term. And here we are now today. The stock is just now starting to poke its head above the high from early last year. It seems like it's ready to get another big move going, right?
Yeah, I mean, totally. This is textbook, right? Like a lot of things, this peaked and started going sideways about May of last year. Whether it's transports, the 10-year yield, commodities in general, copper, they've all been kind of going sideways, building out these nice bases since the first half of last year. This week, we're now seeing Corteva kind of resolve higher from that base, and it should have enough juice, a lot of energy kind of built up for another up leg, like you were talking about, similar to the one that, kicked off in 2020.
Well, you said you were kind of joking, but you were totally right this morning when we were talking. You said the thing about commodity stocks is when they go, they go. And this fits the bill, and this thing could have a big run. Now, are we expecting this stock to double in price over the next 6 months? We're not expecting it, but I don't think we'd either be totally surprised either. But what we are doing here is the trade that we're putting on, we want to give it a little bit of time to work. We want the breakout to develop. So we looked out of the options chain and we looked as far as September. September felt right. The next options after that were January. That felt a little too far out. But in September options, we were able to find the 60 strike calls, which were approximately the 25 delta, which is what I like to buy when I'm buying straight long calls. The September 60 calls were trading around $1.80, give or take. And that feels like a really good price. I feel like we'll have a really good opportunity to double the value of those calls. If we get any kind of follow through on this breakout, I think we'll have a good opportunity to see at least a double, at which point I always like to sell half so that I could rest easy holding the rest all the way to the expiration month if possible. So that's the way we wanted to play. We wanted to keep it simple. A big reason, or a couple of reasons why we chose to do just long calls versus, let's say, a bull call spread or maybe a calendar spread, is because while the options were tradable, but they didn't have a whole lot of open interest. The bid-ask spread on the options weren't terrible. They weren't ideal, but they were good enough, right? Like good enough that I felt that we could get a fair fill. But whenever you have any kind of questions or any kind of doubts like that with options, it's best to keep it simple. You don't want to start trying to do a multi-leg spread because more things can go wrong. You could get an unfair fill or not get a fair fill at all, not get filled at all. And it's hard enough at entry, but then when you want to get out, it's even harder. So we wanted to keep it simple. Just do a single leg buying calls. Keep it simple, stupid, right, Steve?
Yeah. And, I'm glad you touched on that because it goes back to this whole theme. It's kind of difficult, not difficult, but you have far fewer options when it comes to finding exposure to commodity trades, right? This is a great way to do it. And in this space, you're really not getting much. This is the second largest stock in the agricultural space. And like you said, it's not super liquid in the options market. So, there's not many opportunities to kind of bet on these trends. I think this is a really nice way to do it. We're just betting on this breakout, remaining valid and following through to the upside, which if it stays above those first half highs from last year, we have to make the bet that it's going to follow through and make a nice leg higher. And those options are going to pay us if that happens.
Yeah. And of course, because it's a long call options trade, our risk is defined, right? We paid $1.80 for these calls, or you can get them for $1.80. That's the most you can lose. If the stock goes to zero tomorrow, the most we can lose is $1.80 or whatever we paid for them. And there's some comfort in that. If you size your position properly, do it in a way that if you were to lose 100% of your invested capital, it's really just going to be just a little sting to your portfolio, nothing major. That's the way we do it. I mean, a good rule of thumb that a lot of professional traders say is never risk more than 1% of your capital in any one trade. I know many successful traders who limit it to 50 basis points of their capital. Right. Whatever that number is for you, size this position properly. So if the worst case happens, at least you know what your risk is and it's something you're totally comfortable with. Now, with that said, Strazza, our goal is not to just let this thing ride. And if it reverses on us, we're just going to let the calls expire and go to zero. We're going to try to avoid that if we can. The level that I'm watching for risk management, which doesn't really show up that great on this chart, but 49 is the level in CTVA that if we can't hold 49, which more or less corresponds with the upper limit of that base that we've had over the last few months. If we can't hold 49, that's my signal to exit the trade and try to minimize any potential further losses from there. And hopefully there'll still be some premium left if that happens.
It's funny you said that because we didn't discuss this when we were talking. I was just looking at the chart. That's exactly how I would do it too. You have like a shelf of former highs there, November, December, January. Price kind of paused and reversed there every month until breaking out. And also from a risk management perspective, something we were discussing is a lot of these commodity stocks that we were looking at that looked good all have earnings this week or next week. Corteva's earnings were this time last week. So you have that whole earnings report kind of volatility behind us, which we like, right?
Sure. And what's that phrase that people like to throw around? Post earnings after drift. What do they call that? The PEAD?
Post earnings drift, right?
Post earnings drift. Maybe I said that wrong. So, hey, that might be what's happening here, which that's fine. That plays well into us. And momentum tends to beget more momentum. So, hey, whatever it takes to get this thing going, we'll take it.
Totally.
All right, Strazza, thanks again, man. Thanks for the help this morning with this trade, as always. And for everyone else, have a great trading day, and we'll catch you next time. Take care, everyone.
Peace.